Yes, yes. Good afternoon, my fellow simpletons and degenerates, or good evening, depending on where you are. Good morning, based on whatever part of the world you're watching from. It is I, the Savage of Wall Street. Once again, let's get this fixed a bit. Yeah. Just making sure you guys are doing well. Hopefully, you guys are having a great weekend and are not doing too much or going too crazy. But if you are, it's all right. You're just one of the crew at this point because everything seems to be up in the air, at least in my life, when it comes to my personal life and obviously the stock market. I hope you guys are doing well and things are going according to how you're planning them. Uh, Good Sunday evening. It is I, the Savage of Wall Street, once again, um, going live like I said I would, and just touching base with my fellow simpletons and degenerates. Hopefully, we're getting ready for tomorrow and see how we're gonna trade this market. Um, Seems that we're entering a nice little bearish patch, and obviously, I've been telling you guys that based on this little guy right here that it likes to come out and play, and he's ready for tomorrow to break people's hearts and let them know that he is in fact serious about his nice little reddish positions for the next month to come, at least September, because historically September is probably the worst month of the year to trade. So it is I, the Savage of Wall Street. Hopefully you guys are doing well, and we're back at it again, my guys. How you guys doing? I hope you guys are having a good time. I hope you guys, are relaxing and are able to take, 20, 30 minutes out of your life to kind of gather over here and let's talk shop, right? Let's see here. Jude K is in the house saying good afternoon, Savage. Mystic Tree Woodcrafts in the house saying ahoy, lucky number one. Woo! Jude K saying hi to all in the chat. Mark C's in the house. Evening, y'all. Let's make cash tomorrow. Indeed, we are ready. And I'm just basically trying to catch up on the news that I have, and I'm trying to see. Let's see here on Yahoo Finance. How we're looking for tomorrow, at least in the pre-market, or how we're doing in Asia right now, and seeing that we are in fact, I think, kind of. It seems like we're kind of trading sideways. It's kind of to be expected. I think people are kind of just nervous, because we've been getting hit a few days now, right, with a little sell-off. And has the bleeding stopped, or is it more to come? We won't see until tomorrow, right? So let's see. What is NASDAQ futures doing? NASDAQ futures. Let's see here. AI stocks diverge. Two big techs jump on news. Stock futures are a little changed as Wall Street awaits key inflation data. And of course, us, simpletons in this channel, we're awaiting GME and see what they're going to give us as far as their quarterly earnings. I am actually expecting good news, right? The stock is trading around $22 a share at this point. It should be closer to $30 to $40 a share, but we are where we are. I'm sitting on some cash cure puts, and I think a lot of you guys are as well. I'm long on puts, actually, semi-long, and I'm just I'm waiting to see what they tell us, right? Let's see here. Yes, Mark C. In fact, let's make some cash tomorrow. Okay, so far, what do we got? We got Unity at the 52-week highs, Open Door Technologies at 52-week highs, IOVA, Alliance Biotherapeutics, it was up 13% actually last Friday. So I'm looking pretty good, man. I added some shares, and I'm sitting on 2,000 shares now. Average cost is 208, and so nicely up a bit. So I'm waiting for it to get to like the $3-4 level, and when that happens, I'm probably gonna sell some $4 covered calls. If we get a 350, I may sell some $4 covered calls out to January and bring in some money that way, because that's what we do with this channel, right? So when it comes to the market and everything that is showing at this point, you know, companies are overbought, my friends. It's just my personal belief, just based on everything I'm seeing, you know. And again, Target is telling us that, you know, people are spending less. Walmart is telling us in their with their numbers, our quarterly earnings, that people are spending in fact less. You know, unemployment is high because we're losing more jobs than we're adding. I believe that the jobs created this past month in July were 22,000, I believe, or was it August? I think it's August, right? No, it was July. 22,000. So we have a ridiculous amount of people that are, you know, laid off looking for work, and we have the newly graduated college graduates that are looking for work, and you know, they have taken on some serious debt because they were told, if you go into higher education and you do things by the book, you do it right, you get yourself in debt. When you get out, you're going to have a nice, you know, six-figure salary waiting for you. There is no six-figure salary waiting. It's actually very, very, very hard to get a job in the last few months. I know that the job market is extremely, extremely hard right now, because I actually have gone on some discords, and I'm seeing that just people are they're looking for work right now, and they've been looking for months and months. Some have sold or sent over 100 resumes, and they still can't find work. Some people have been looking for over 6 months, and you know, their unemployment number, you know, their unemployment has actually run out, and so at this point they're just they're living on credit, and it's pretty sad because as far as credit cards go, delinquencies are actually up. You know, there's more people unemployed now than there were during the pandemic, and we're seeing numbers that are very similar, if not extremely alike, to the 2008 financial crisis, right? So, I mean, the writing's kind of on the wall. Everybody else is telling us, you know, that their guidance is down. I mean, even great companies, um, the good companies that are making money are now telling us they're going to start buying stock back. That's never good, you know. And then, you know, companies that are doing okay are giving us guidance that is lower in the next quarter, right? So you can't you can't grow by getting smaller. That's just not the way it works. And so um companies overbought. There's a nice little sell-off going on. Um and as far as the market goes, you know, if you're looking at a specific company and then they're near 52-week lows, you have to make up your mind. You know, are you going to sit on the sidelines and kind of wait it out and see what happens, or are you ready to just, you know, take the bull by the horn, so to speak, and going through some cash secure puts? You know, there's actually a lot of companies that are on sale right now, and it's actually a pretty good time to, you know, hop in and kind of get your feet wet, so to speak, right? And see that, you know, if it's a company you've been eyeing for a couple of months and it was too expensive for your taste and now it's getting a little lower, you know, don't be afraid to go with a cash secure put and bring in, you know, a little money so that you can actually buy the company. All right, what do we got here? So Marcy's saying Uncle Bruce said SoFi shorts dropped 30% recently from 155 to 105 million. You know, at this point, everybody knows that, you know, SoFi is on an uptick. You know, shorts would be stupid to try to short it now when the market knows about SoFi, and they have been killing metrics left and right when it comes to their earnings, right? And it's just on the uptick. Right now, SoFi has actually gone down in value off of 52-week highs because people are just selling off because they're trying to. A lot of people are getting margin called, and then you have to take profit. A lot of people bought SoFi when it was $5-6 a share, and then it got to $28. They said, I'm making $22. So I pretty much 4x my money, 5x my money. It's time to take profit. And it happens. It happens to the best of stocks. It just so happens that it's happening when we have news that the economy is not as great as people make it out to be, at least the pundits, right? I mean, do you guys think that we are at all-time highs as far as the overall economic of the country? If you guys just look at the unemployment, right, and look at the type of people that are looking for work, and you also see at the civil unrest, you see where these cuts are being made on different programs, and where the tax cuts went. Does Jeff Bezos need another super yacht? Right, the guy just had a $1 billion wedding. I mean, a $1 billion wedding, right? A destination wedding in Italy, I believe. And so, I mean, that's just the disparity between the poor, the haves and have-nots, so to speak. It's greater than it's ever been. So, you guys, you guys have eyes and ears. I don't need to tell you guys how the economy is doing. You guys go shopping, right? You go grocery shopping. You go to Costco. You get to see if things are more expensive than they were a year ago. I mean, I'm not the one telling you things are more expensive. Your pocket's telling you things are more expensive, right? So, how confident do you feel that in the next year it's going to be better than it was in the past year? So I personally am sitting on a ridiculous amount of cash secure puts, and I'm okay with that because I'd rather be sitting on cash at this point, and I have a lot of cash on the sideline because I think there's going to be some good opportunity coming up, right? I think some good deals are going to show themselves, and I'm going to go in and try to buy some stock in the cheap, and then I'm going to wait for it to recover, and then I'm going to sell my covered calls and make money. I mean, that's the name of the game, right? So personally, I'm excited. I mean, I'm excited. I know you guys are excited because you guys have been, pretty much. You guys are of great minds think alike, right? You guys have been seeing me, and Uncle Bruce has been talking about this as well, for over a year, and he's, it's just we're frothy, So at this point, you gotta kind of start making up your mind and seeing where you're gonna go if there's opportunity, and I think that would be wise. Sitting on a lot of cash right now is the smart thing to do. Cash secure puts long are not a bad thing. I mean, SoFi, $25 cash secure puts, $30 cash secure puts out to 2027. GME, $25 cover cash secure puts out to 2027. Not a bad idea. Unity's a 52-week high. I wouldn't do cash secure puts on them, but if you have Unity stock, sell some $50 covered calls, expiring June 2026. Bring in a lot of cash and sit on that cash, and if Unity happens to be one of the few stocks that does not, take a hit when the stock, market drops, great. Then you could get paid $50 for your shares. You bring in $5,000 for that contract. If it's 10 contracts, you bring in $50,000. I'm sure that you bought the stock at less than $50, so you're making money. And then now you're going to be able to use that money somewhere else. Don't be the type of person that falls in love with a stock, and says, I'm not going to sell this stock because it's my stock, and not get paid and then be the victim when we have a nice drop and the stock market drops, right? And then your portfolio goes down 20, 15, 20, 25%, and then you have nothing to show for, right? You don't want to be in that position. I rather be sitting on a red portfolio in terms of, like, my covered calls are red because the stock market went up and I called it wrong, and I'm gonna get taken out on a lot of covered calls. I rather have that because that means that the value of my stock is exceeded my covered calls. In which case, that's a good problem to have because I can always roll, right? Or I could just take the money. That's the name of the game. As long as you're not selling for less than you bought the stock, that's where you want to be. Um, so yes, shorts are done when it comes to Sofi. Man, I think I know. I may see them coming back in if there's some bad news somewhere, or like or the economy takes a hit. But I mean, overall, when rates are cut, banks make a lot of money because people take out more loans, and we know that SoFi, that's kind of like the number one thing is they loan out money. They loan out money to people with really good credit scores. So they kind of they that's what they do, and that's how they're able to. They have actually made a company that way, right? They take less risk than most banks, and they're able to cash in on that. Kent's mom is in the house. Kent's mom, how are you? I hope you're doing well wherever you're watching me from. Kent's mom is like the number one fan, and I absolutely adore her because she's always watching, and she's always giving me a thumbs up. I appreciate that. Beach Boy is in the house. Damn, Beach Boy, where you? Are you still in Thailand, Beach Boy? I know you were in Thailand for a while. I don't know if you're back yet, but what are you doing as far as GME? I'm very curious, Beach Boy. Are you trading Unity? Are you? I think you probably on covered calls already. Mm, I know you may have been on C3.ai, and I'm wondering what your thoughts are. I honestly think that right now it's an opportunity on C3.ai because nothing has changed. It's just everything is the same. The CEO is pretty much coming in to take over, but the current CEO and founder is staying as a chairman. So if anything, the company just got better. Um, the CEO that's coming in and is going to head the company, he has he has a background in AI. He actually had his own companies. He founded two companies and sold them to Salesforce, which means that he has Mark Benioff on speed dial. And I firmly believe that C3.ai may be working with Salesforce and integrates into Salesforce, and that's going to be a huge contract. And if that happens, C3.ai is going to $30 a share or more. But that's just at this point, it's neither here nor there. It's all us just kind of, hoping that's what happens. And so what do we know? We know for a fact that the stock is $15, $16 a share right now. And you can sell some 1750 cash secure puts out to like June and bring in some cash so that you get paid to buy the stock at 1750. Bring in $3-4 per share. You're basically getting paid 1250. You're paying 1250 per share, 1250 to $12 a share. Not bad to start a position. Then and you're getting paid for that, right? I don't see a problem. Mr. Lucky is saying Savage. Charlie C2 is in the house. Hi everyone in Savage. Hope everyone is having a good evening. Me too, man. I hope you guys are all having a great evening. Moneymaker Juan is in the house saying good afternoon. Mr. Lucky is saying, should I sell my 3,000 shares of Open and sell 650 or $7 cash secure puts or sell covered calls for 9? Why? I mean, if you're okay, so if you're willing to sell it where it is at right now, right? And this is just hear me out. You're willing to sell it where it's at right now, okay? And it's 666. That means you're willing to sell it at 650, 666. Why don't you sell some $7 covered calls expiring October 17th and bring in $133 a share, right? So you bring in $133 a share, say 140. Put the stinker at 140 in case of a nice little pop tomorrow. 140. You have 3,000 shares, so that's 30 contracts. So you bring you're gonna do 140 times 3,000, $4,200. That's what you're doing. You're being paid to sell your shares. You're being paid $4,200, and you're selling them at $7, right? So you're making $4,200, and you're selling 7 times 3,000, right? You're gonna get handed October $21,000. If this pans out and you get taken out at $7, you get $21,000 in your account. Don't forget the $4,000 you just got paid. There's absolutely nothing wrong with that, my friend. You're basically getting paid over $25,000 for Open Technologies shares. What is wrong with that? Worst case scenario, it's not, it's less than $7 the stock in a month, and you get your shares back. Guess what? You're gonna sell another 30 contracts for November, and you bring in another 4,000, 3,000 bucks. What is wrong with that? Absolutely nothing, my friend. Absolutely nothing. Just something to chew on, right? If you want to sell it, I would say $7 is the way to go. And then if you do get 25,000 bucks in October, you don't have to go at $6.50 or $7. Let's say you could wait for the stock to drop back to $5 and sell some $5 cash your puts out to November, and then bring in some money, right? And then dare the market to take you out. And then you keep the difference. What is wrong with that? I think that would be a much better move. Andres de la Torre is in the house saying hi, Savage. And Andres, what is up, my friend? Cannon Fodder saying good evening, folks. Beach Boys back home. Good stuff. All right. So back in Israel, good. Friday, I bought back some Unity cash secure puts rate in July, 50% gains. Couldn't let the all-time high go to waste. I agree, my friend. I totally agree. You brought 50% of them gains. You probably did 3,000, 4,000 shares. So that's very good money. I agree with you. I think that's beautiful. I personally sold $50 covered calls and $45 covered calls on Unity out to like 2027. So I'm good to go, my friend. Mr. Lucky saying thanks, Savage. No worries, man. That's what we're here for, brother. It's just you could look at things from a different perspective, and that's basically the name of the game. Man. There's a divergence in a lot of stocks. I don't know if you guys have seen it, but the volume is actually low. The volume is actually low as the stock falls or the stock rises, right? So when the volume is low and the stock goes down, or the volume is low and the stock goes up, that's called a divergence. Basically, the volume has to follow the stock, right? Or the stock has to follow the volume, meaning that if there's a lot of volume and it's selling off, right, then it makes sense that the shares go down because a lot of people are selling. Conversely, same thing when there's like green and there's a lot of volume and the stock goes up, right, and the stock gets more expensive. There's no divergence because the price, the volume is following the stock. Same thing with when it's selling off, right? When it's red, the volume, the price have to follow the stock downwards, and it's got to make sense. If these things are not true at any point, then there's a divergence. The question is it a divergence to the downside or is it a divergence to the upside? And that's where you have to do your due diligence and see, what the RSI is, what the daily moving averages are. Look at the 100, 200 EMA, look at the 50, look at the 10, right? And see your Fibonacci's, all that stuff. You kind of gotta, that's what it helps to know that stuff and look at, where the stock is sitting. And then you could then make an educated guess and say, you know what? I think that this stock is probably on the downside. and I'm going to do some cash secure puts when the stock goes down 5 to 10% on some day. Or if it's on the upside, you could say I'm holding the stock and I want to wait for it to go 5-10% up on a day, and then I'm going to sell some covered calls out to 2-3 months and bring in some cash and get paid. But don't forget, uh, as of this moment, right? We've had a pretty good bull run, I would say. And even if it is a little frothy, right? The AI boom has kind of taken us up to this point. I believe that the Mag 7 kind of have us here at the moment because those companies are making ridiculous amounts of money. But just because those 7 companies are making a lot of money doesn't mean that the majority of the market, the majority of companies are making money. And that's exactly where the disconnect is. That the fewer are making a lot more money, while a bigger percent on the bottom are making less money. That accounts for like the overall economy. I think that's actually a better metric. So that's what you have. Those are the things that we have to look at, and then we have to have a good conversation with ourselves and say, you know what, I think I'd like to be sitting on more cash than usual, right? I think I'd like to be selling some. I'd like to be a little more aggressive when it comes to my covered calls instead of going up. Let's say their stock is at $40 and you're used to selling 50s. Now you could be like, you know what, the stock's at 52-week highs, it's at 40s. I'm gonna sell some 40s. I'm gonna sell some 40s out to 6 months and bring in, if the stock is 40, you're bringing in $10-15, right? That's not a bad thing at all. I have some uh, SMCI shares that the stock was like a 50 something, I think. And I was just like, I have to make a decision, and do I think that the company is worth what it is at this point, and do I think it's going to keep going up? It ran up too fast. So what did I do? I sold some covered calls. I sold some 50s and some 45s. And the 50s were for expiring January 15, 2027. And I got 1660 for those. Right now, I'm 47% in on the green. Total return is 47%. I'm gonna keep a holding. I'm gonna keep a holding those. I'm gonna see. I want to dare the market to do some more soul searching, if you will, and see if in fact somebody wants to buy those at 50 badly, right? And then I sold some 45s, same expiry date, 2027, and those are 44% in. I sold those for 1850, and I'm waiting. I'm crossing my arms. Right now is not a bad time to cross your arms if you're selling covered calls, or if you haven't sold covered calls. This is maybe where you want to take a position and sell some covered calls. Um, I Sentinel One. I think hasn't really started trading now, but I'm very curious to see what it does tomorrow. Nvts, it's sold off quite a bit because it went up too fast. I'm looking to see what it does tomorrow, but I'm looking at perhaps some more cash secure puts. Sofi Technologies, it sold off on Friday, it recovered to 25.41. So it ended up in the green, but then the after hours it went down a bit more. Let's see if it holds 25. I think we're going to 24 again, 24 or 23. But when the rates are cut, if we get 50 basis points on the 17th of September, I think SoFi is going to $28 a share. In which case, if it does, you can sell some 30s for January. And dare the market to take you out. If you bought SoFi at 10, 9, $8, you're laughing. And then when you do get taken out, you get all that cash in your account. You can wait for some red days, which there will be, and you can go back into SoFi, except you're not going to go at 30. You're going to go at 25 because you sold at 30. Buy back at 25 and get paid to do so. Do some cash secure puts out to like March and bring in cash. There's absolutely nothing wrong with that at all, my friends. Remember that the your loyalty is to you, right? Your loyalty is to you and to you only. Um, you guys gotta you guys gotta remember that the number one rule of Wall Street is nobody knows what the market is going to do, man. It doesn't matter who you are. It doesn't matter if you're Elon Musk. It doesn't matter if you're Jeff Bezos. It doesn't matter if you're Donald Trump. Nobody knows what the stock market is going to do. And everybody else that tells you otherwise is trying to sell you something. The best you can do is prepare yourself for both angles, right? You're going to make money if you're in this options tradings game, if the market is red and if the market is green. It depends on what positions you want to take. Um, I I cringe at the fact that I've been watching Jim Cramer. I watch him every so often because I like to know. The guy's not dumb. Like he knows a lot about a lot, right? But remember, at the end of the day, he's an ex broker, and he has a lot of buddies on Wall Street, and they're losing money because um, retail, us, people like us, they're not paying them, thousands and thousands of dollars to manage the portfolio anymore, right? We've taken um, our our futures into our own hands, and we're not paying them thousands of dollars to manage our portfolios and get paid when we make money and they get paid when we lose money, right? Their number one job, right, is to take your money into their pockets, right? To make it so that you could put as much money that you've saved up and put it into like their brokerage accounts, and then they'll manage your money, and they'll do exactly what we are doing, which is what which we're selling cash secure puts and selling covered calls, right? This is why they don't want retail trading, and then Jim Cramer was saying that he feels that that retail right now is out of touch. That we should not be trading stocks like Nvda, Microsoft, Tesla, and such. We should just buy it and then let the experts take it off our hands and do what they do. And that shit makes me so mad because I honestly outperform the market every year. I know some of you guys outperform the market every year. And these clowns want to bring me 8%, a year, 10% a year or less. And then, right, um, they want to charge me a freaking commission, right? They want me to give the professionals money, um, whether they make me money or not. If I lose 8% or 10% on a year, do you think they're gonna charge me a commission? You bet your ass they will. And this is the thing, if they make more than 10%, there's clauses on these accounts that say that they actually take a bigger chunk of your portfolio. They take more commission, so they never lose, man. And then you have to now, you have to have an honest conversation with yourself, and you have to basically say, is this what you want? Do you want somebody else, that has absolutely no interest in you as a person, right? Do you want them making your financial decisions? Do you want them taking over your portfolio and trading your accounts, however they see fit? Because to them it's just nothing. It's nothing to them. It's just they're getting paid every other week, no matter what, whether they make money or not, right? And it's their job to keep you on the hook as long as they can. And guess what happens whenever there's like a Palantir or a Unity, and they said you've made a killing? Remember, we told you to get into these stocks, and you did, and you made a killing. Um, how about you sell half of it? How about you sell half of it and then give us the money, right? We're gonna trim, and now we're gonna use that money to go in another stock that we see is gonna be profitable in the long term. Um, and you say yes because guess what? They bought you Nvidia, right? When it was $90 a share, $70 a share, and then you made a killing. But guess what? You're gonna have to pay now a bigger fee. And the point is that you're gonna keep paying fees and fees and fees. And yes, you're making money, but you know how much more money you would be keeping and making if you just took your account into your own hands and decided to trade and sell cash secure puts and options, covered calls. You make a lot more. You'll be outperforming the market 30, 40, 50%. But you have to make a decision, and you have to take, a good look at the mirror and say, hey, man, a couple of people that I know are doing it, or a couple of people. I mean, this is it can't be rocket science. Maybe I should give myself a chance and see what I can do. Don't sell yourself short, man. All right, what do we got here? UiPath. UiPath is had quarterly earnings, and I think they're looking good. Wouldn't be a bad time to get into some $11 cash secure puts out to October, bring in some money. Figma, I think Figma could come down to $40, and then I'll start looking at some cash secure puts in the 40s and bring in some money. Qbts. QBTS is looking good as far as cash secure puts. Wait on a real red day. Sell some cash secure puts, maybe a $15 or $14 cash secure put out to like January, bring in a nice chunk of change. Rxrx is at 463, selling some 450s or some $4 cash secure puts out to January. Not the worst thing in the world. AI, C3.ai is 1542. Like I said, selling some even $15 cash secure puts out to January. Not the worst of ideas. SMCI is sitting at $40. Even at $40, I think some $40 cash secure puts out to January are bringing you $4 or $5. Not a terrible entry point. The stock has been over $50 a share, and they're the only ones doing what they do. So don't be scared. Nvda 166. Nvidia is one of those that I think is overvalued, but it doesn't matter what I think, right? It matters like what the market thinks. So it's down. It was at 183 not too long ago. It's 166, almost $20. If it touches 155, right? If it touches 155, I think it could go to 140s. But if it touches 155, don't be afraid to go to June 16th or 18th, 2026, and sell some 145s cash secure puts and try to bring in $15. So basically you're buying for 130. I think that's a great entry. That is a great entry. So some stinkers, every time you kind of, or you could put them in, a setting in there that, good until closing. For $145 cash secure put, and put a stinker of $15 on it. The ticker is sitting like at the 145 strike. The premium is sitting at 1160 right now. It would be so much more attractive if it was $15. You get $1,500 to buy Nvidia at 145 a share. I think that's great. That's a great entry point. Um, if it gets to the 145s and you decided you want to go and sell 140s, you could sell 140s for $13 bucks, and basically you're buying Nvidia at 127. I mean, that is not terrible. So it all depends, what you want to do and what type of approach do you want to take, but I think Nvidia's got some room to the downside for sure. Let's see here. Andres de la Torre saying hi, Savage. And oh yeah, you're back home. Mr. Lucky saying thanks, Savage. D Visualizer saying Savage 100%. Yes, sir. Ricardo Canales in the house saying Savage. Charlie's in the house saying hi, Savage. Great to catch you live, and great to be live, my friend. Great to be alive as well. I had a good weekend. I saw my kids play soccer games, and they both played. They both did well. My daughter, she ended up scoring a goal, and I was very proud to see her play. She played she actually the team they played was not the toughest, but there was a player in the other team that was extremely good, and you can tell she was like above everybody else. And I made a case to tell my daughter, that's their best player. Um, Lock her down on defense, and it just, at first I was angry at my daughter because I would see her out of position when she was playing defense. I was like, "What are you doing? That area is like empty. There's a big hole over there." And then I realized what she was doing. She was playing man to man. What she was doing is she was literally following that player all over the field. Anywhere she went, my daughter went, and she took her out of the game. And she didn't. I mean, she kind of trusted her teammates, and I think she may have talked to them and said, "Hey, I want to lock down, um, you know, number 7 over there, and you guys kind of keep an eye out over here whenever I end up, going a little further out." And I think it was great, man. It was just good seeing how she's maturing. I'm very proud of her. Um, she scored a goal and then she went into defense mode, and it's a joy watching her play because I see just how locked in she gets, and I really enjoy watching her teammates as well when they have like this trio in defense, and I just see absolutely nothing getting through, and when someone does get through, I see that the other two come automatically and assist. It's just, you know, it's one of those things that I've watched. Like my team is FC Barcelona, right? That's kind of my team to watch, and obviously I watched Messi, Ronaldinho, I watched Xavi play. Of course they're amazing players, and I enjoyed watching those games. But if I can be honest, I actually watch and I have more fun watching my daughter play. Although she's 10, 11 years old, and I watch those games with way more excitement than I did watching like the champions, which is insane. But it's just good to be a dad, man. And I had a great weekend. Um, I took my daughter and my son, who both play soccer, out to run around today in the at the park, and just that quality time was cool. I cooked lunch for us today, and the family had a nice little lunch. Um, I got the kids some boba yesterday. I took them to Spirit Halloween. And they were bought some costumes, so they're getting we're getting ready for Halloween here, and just being a dad, man. It's kind of cool. I enjoy it, and it sucks that I'm still kind of I'm after a while I started feeling my lower back yesterday. It really started pinching, like it hasn't pinched in like a week or two. Um, so it's unfortunate that I'm still kind of injured from work, and I'm gonna go in for MRI. We'll see what the doctor says. But I'm keeping positive, and I'm letting these moments, right, that happen, kind of, I take them in, and I enjoy them. And it makes it kind of worthwhile when things are not as positive, um, and um, and it gives me insight into, like, retiring early may not be a bad thing, man. Like, it would be cool to go see play my daughter play, in college. Like, I honestly think my daughter would be okay, an okay college player. Just the way that I wasn't a college an athlete in college, and I push her, and I know she gets frustrated because sometimes I'm hard on her, um, but I see a lot of myself in her, and I think she can make it. She has that drive. I'm still fostering it, and I'm trying to kind of make sure I push, but I don't push too hard, and I don't want her to hate the game. I don't want her to like hate me training her. I want her to like enjoy our time together, but I don't want her to dick around either, right? Like, I don't want her to shit around because she'll just like be all lackadaisical and like just start telling me stories and like just kick a ball. And sometimes that's cool, but right now she's in season, so um, I noticed towards the end of the game yesterday she was very winded, and yes, you should be winded at the end, but I think she could be better, right? And I think taking an extra hour and a half every week to like run around and like run sprints and run drills. I think that's gonna do wonders for her game, and my son as well, because he gets to go out and kind of play against his sister, and he's actually really fast. I think he's be a great striker. But he's a ham. So yeah, that was my weekend. I hope you guys have had a great weekend. I'm curious to hear what you guys have been doing for the weekend too, man. And anyways, that's kind of why I'm just ranting here, because I just think it'd be great to have a couple of $1 million, and like Beach Boy, and just trade, sell some thousands of shares back and forth, or hundreds of contracts back and forth, and bring in 30,000-40,000 every few months. And even if I make 250,000 a year in just like little moves here and there, I think that'd be enough for me and the wife to just to kind of travel and have fun, and then retire early, and then go see our kids play games, go see our kids in college play games, and have fun, and enjoy them. That's why we do this, man. All right, so let's see here. What else was I talking about? Hey, man, thumbs up. Don't forget, thumbs up, share, watch my live a couple of times in the background, just to help the channel get traction. It's been getting a little more traction, and I appreciate that, but trying to reach more people. Remember, my goal is to make 100 millionaires. 100 millionaires is my goal. If I can make 100 millionaires in my channel, with my channel, I think that'll be kind of cool. So that's the goal. Nano Dimension is, you guys have to look it up. NNDM is the ticker. It's sitting at 136 a share right now. I think just buy the damn stock. Have 136 bucks. I'm not telling you what to do with your money, but if you bought 100 shares, it wouldn't be the worst of things that you have done. I'm sure you've lost money doing dumber shit than that, right? So if you bought 100 shares and just kind of sat on them and see how it moves, not the end of the world, my friends, because I think that this stock could 10x easily. Ionq, it's $41 a share. I think it's if you do some 35 cash secure puts, not the most terrible thing. If it comes down to 35, then sell some 30 cash secure puts. But at this point, I'm watching Ionq. I got in when it was 14, 15 bucks a share, and I'm riding it at this point. DNA, Ginkgo Bioworks, ticker DNA. It was 1685 on the 52-week high, $5 the 52-week low. I'm watching it. It's a biotech company, and I think it could 10x easily. Where they're working on some things, and put it on your watch list. Not the worst thing in the world. See how it moves. It's got some good premiums. So, if you want to take a stab at it and sell some $10 cash secure puts, out to like March next year and get paid a few bucks, I don't think that would be the most terrible thing in the world. $10 cash secure puts out to March will bring you $200 and $235 right now. You could get them probably $235, $233, $235. So what is that? That's 23% on your money. No bank will give you that, So see how it moves. ABCL, Abcelera Biologics. 52-week high was 582. 52-week low 189. I think if it gets to 350, sell some $3 cash secure puts out to a few months and get paid to buy the stock. Buy 100 shares. Not the most terrible thing. And see if you get placed those shares. If not, then you could wait and then do it again. Ethereum is $4,300 a share. I'm waiting for it to touch 37. If it touches 37, 36, I may buy one. Bullish is recovered. Bullish was down to $48 a share. My cash secure put never triggered. I was trying to get $8 for the 45. Didn't happen. I think it got to like 7. But I'm still, it's early. Have it come down some more. If it comes to $40, if it comes down to $40, I'll sell some $40 cash secure puts. And if I bring in $7, $6, not terrible. let's see here. Talkspace, TILK, 260 a share. Wouldn't be terrible to buy 100 shares and just hold it, see what happens, see how it moves. TALK, the CEO is a great guy. I've never seen a group of people go harder and kind of look after their CEO the way that that his people do. They actually care for him. The guy's a great person, and he runs a tight ship, but he's a good guy. And I think that when this when this it's kind of like sound hound. It's like a sound hound. When this uh, stock jumps, it's going to jump. It's going to 10x. But at this point, it's just consolidating. I think um, some contracts have to be signed, and he's got to talk to more companies. But I'm very interested to see how it moves. Um, QQQ QQQ is up overnight. I'm very interested to see how we go for the week. QUBT, $15 a share. On a little weakness, you could sell some $14 cash secure puts out to October or January even. Sell some $14 cash secure puts. Try to bring $3 a share. Try to bring in $3 a share. Put a stinker out there to basically buy the stock at $11. I think it's another quantum computing stock that it's just early. It's early on, and when it flies, it's going to be $100 a share. But it'll be too late by then. So you kind of want to get in now. Riggedy computers, riggedy computing. I like it. I'm in for $15 cash secure puts, expiring October 17th. I got 145 for them, and so I'm trying to see what it gives me. Serve Robotics is an interesting one, and I am going to load up on this one some more. I hear some whispers that some more contracts are in the works, and the thing is going to fly. Um, it was 24.35 in during the 52-week high. It's at $10 right now. I've done some $10 cash secured puts to October 17th, and I got 90 cents for them. I'm probably gonna write five more and try to bring in another 90 cents to a dollar and see what happens then, because I really I want more shares. Soundhound, like I was saying, it's $14 a share right now. It was down to like 12.80 on Friday. That would have been a beautiful time to sell some cash secure puts. You missed that train. I say wait for another opportunity and try to sell some 13s and bring in $3. If you go to January, or even some 12s, $12 cash secure puts and bring in 250. Basically, you're buying it under $10. Not the worst thing in the world. Um, Domo is at $14. I think it comes down to like 13, 12. Figma, I'm watching Figma to come into like 45. Galaxy Digital. Galaxy Digital is interesting. It was like at $22 last week. And I basically said some $22, 22.50s. Expiring in October would have been cool. And you could have gotten like 250 for them at that point. Right now, those are worth less, obviously. So wait for some redness, and maybe the 22.50s are not terrible. We have Webull. We have Webull. I really like Webull, guys. It's a direct competitor to Robinhood. I like Webull though. Um, it's trading at $13 a share right now. I don't see anything wrong with going to January and selling some 12.50s and bringing in 250. As for 250 a share in premium, so basically $250 for putting out $250 to buy the stock in January at 12.50. You're essentially buying for $10 a share. Not the most terrible thing in the world. The stock has already been to like $90 a share, right? So it's up to you, man, whether you want to take the plunge or not. Do your due diligence and see you want to go and play. Um, the VIX, I'm interested to see where it's at. It looks like the VIX is actually down a little bit right now, so that's good. It means that tomorrow we may see some red. Uh, AOI. AOI has gone up since I kind of told people to do some $22 cash secure puts on it. It was like $22.50. It's now $24. I got paid $250 for those $22 cash secure puts, and right now they're sitting at 188. I want to cross my arms, because they expire in October. Very nice premiums for getting into the AOI playground and playing. It always moves. This moves from $24 to $20 like nothing. It always does. So keep an eye on it. Put it on your watch list. See how it moves. See if it's something that you would like to go in and trade. The premiums are great. Go in through a cash secure put. If you get assigned, sell some covered calls, and then start your wheel. Very good money. Very good premiums. Good company. It has a future. It's been to $30 already. So at this point, it's actually been to like closer to $45 a share. It's sitting at 24. That's like half that. So don't be afraid to take a plunge, man. Worst case scenario goes down to $20. You get put some shares. You sell some $20 cash secure puts or some $18 cash secure puts out to like June next year, and then bring in some more cash. There's nothing wrong with that at all. That's how you start a position, guys. Tesla, $354, absolutely overbought. It don't belong here. However, my $190 cash secure puts expiring December 2026 are going to look even cheaper. And I'm honestly, it's money in the bank. It's in the Charles Schwab account, and it's just generating premium, and it's generating interest. So I'm leaving it alone and just getting paid. Daring the market to put those shares. I really want those shares. Google is $235 a share, 52-week highs left and right, and so we're looking good. Amazon, $233 a share. It's looking red. It's looking green. Looking good. TeraWulf. It was like $8.50 or something like that last week, I think. Would have been great to sell some $8 cash puts out to October, bring in some money, but you know what? It still is. I sell on some weakness this week, buy some or sell some cash secure puts, $8, even out to January, bring in some cash. Sit on some cash, my friends. Snowflake is $226. I missed that train, man. I wish I would have gotten into Snowflake earlier. Lunar, Intuitive Machines. Sitting at $8.49 a share. I think on a little weakness, if it goes down to like under 7, would be a great time to sell some cash secure puts. Go to December. Cash secure puts, $8 strikes. Try to bring $1.50. Basically, you're buying at $6.50. Not the worst thing in the world, my friends. So, as you can see, there's opportunity all around, man. Mara Holdings, $15.20 a share. Anytime that it's like under 15, I go in with cash secure puts, and then I try to bring in $3-4 a share on premium, and then I wait for it to go back up to $18-20, buy them back. That's just the name of the game. That's how I skinned that cat. Nvda, 167. I talked about Nvda. Rocket Companies, it's $20.38 a share. I was telling you guys when it was like, I think $16 a share, buy it. I bought some. I did some cash secure puts at 15 and at 16, and right now those are like nothing, but I'm going to dare the market to bring me down and put those companies in my account. It's sitting at $20 a share now, so we're looking to sell some $21 covered calls tomorrow if we go up more than 5% in a day. That's where we're at right now. Let's see what we got here. It looks like people are just chilling, listening to me jap away. So thank you so much, guys. I really can't say enough about you guys watching me on this beautiful Sunday. I hope you guys are having a great time, like I said, and I'll be back tomorrow. But I don't know. I may go in early. I may come in early. Maybe at 7 a.m., 7:30 a.m. my time. Because we're gonna go to the doctor with the little one. And so, gotta be a dad. And I'm looking to maybe come in for like half an hour and see what the market's giving us, see where would have some opportunity, and then take advantage of the opportunity. Looking for tomorrow's market to show us some more of the same, some red. I think we're frothy, and we have some opportunity, but to the downside, right? We got some weakness. Everything else is showing it. Very excited to see GME earnings on Wednesday, I believe, or Tuesday, and then just either sell covered calls, more covered calls, or sell some cash secure puts. Either way, I'm in it for the long run, and I'm here to make money. I'm here to um, for the long haul, and hopefully I'll be going live for a few years now, and you guys are gonna become millionaires, and I'll be able to hear it and see it here on the live, and you guys are gonna tell me you guys are trading from Hawaii or Japan or Madrid or Brazil or Greece or somewhere in Africa, somewhere uh, in the Qatari Gulf, some beach in Mexico, and I'm very excited to see what the future has in store for us, man. Cindy is in the house saying, "Hi, Savage. Hi, Cindy. You're coming in kind of late. I've been on for a while, and so probably gonna go and hit the road now because I'm very thirsty and I want to go say what's up to my kids. So, knuckleheads, so wonderful of you guys to watch me. So wonderful, catch up with you guys and hear what you guys are up to. Um, can't wait to see what the market has in store for us tomorrow, and can't wait to say hi to you guys tomorrow. You guys take care. Have a great evening, and see you guys in like around 12 hours from now. Because the stock market is going to make us money, whether it's green or it's red. It's all up to us. Um, I'm the Savage of Wall Street. Thank you for watching, guys. Have a great night. See you tomorrow. Bye, knuckleheads. Take care, all.